Hello, guys. This is Robert again with Slow Life Trading. I want to talk to you guys a little bit about my crystal ball and why the way that I'm trading is such or at least if you obey these rules, it can be a safe way of trading. Okay. And if you're disciplined and with Thinkorswim, they're going to help us because they have the capability to put in stop orders, which is something that we didn't have with Charles Schwab Edge, Street Smart Edge. Okay. So it's just going to make it easier and a little bit more, I don't know, help friendly for us to trade and have winning days and consistent winning days. And like I say, if you can't consistently win, then to me, you're not winning. Okay. So let me just show you some of this stuff that we put in our crystal ball. Okay. Here we go. I'm going to start with yesterday's trade. And to do that, I got to show you the chart. Okay. So let me switch over and show you this chart. Okay. In yesterday's trading, I didn't get into this trade until about 12:15. Okay. And this is the trade for the whole day. It looked like it's really moving big. But when you go over here to the right here, you'll see those are only $1 increments. So the high for the day was like 51.49. And the low for the day was way over here at the beginning, which was about, I don't know, 51.27 and some change. Okay. Okay. Now, when I got in at 12:15, which would be 1:15 on this time scale down here because this is in Eastern time. Okay. So I got in somewhere around, let me see here. Let me click this to see what time it is. That's 12:06. This 12:12. That's 12:14. And each one of these bars are too many bars. Okay. Okay. So when I looked at this chart at this time, I determined that the price was going to be above the 200 moving average, which is this red line down the middle here that's moving. That's the 200 moving average. Well, so I put in my price right in here and it got filled on this bar right here. Well, of course it came down, which is actually perfect. But what made me pick my strike price was I went down here to the beginning and saw what the low of the day was. The low of the day was 51.27 and some change. Well, I wanted to be 20 points below that, which would have been about 51.07. Well, I tried to get the 51.05s. It just wasn't giving it to me. So I moved up to the 51.10s. Okay. Now, what I use as a protection is two things. Number one, when I was getting in, the price had moved down to 51.34, which means I was about 25 points away from it at that time. Okay. That's one protection, which means it could have came down as long as it didn't come all the way down to my number. But the other thing that I used as a protection was the date, the current day's low, which was down here at the beginning of the day, which was 51.27. I wanted to be below that. Okay. So I got in. I got my price. It wasn't going to be much, only going to make about 8% on that trade. And the market came down. Well, I wasn't worried because it never got to the previous day's low. Okay. I'm not even going to even think about getting worried until it gets to that point. Okay. It came down. Then it started going up. And then it went on up, went crazy. Okay. And you think you got it made in the bag. And then towards the last 45 minutes of the day, the market started tumbling down. But guess what, guys? It never broke below the previous day's low. It never got this low. It came down. So even with all of that, I still wasn't worried. Now, what I call this is a typical shakeout, okay, especially for option traders. Because when they see this market going up like this, they have a tendency to go want to buy calls. And the market shoots up and they think it's going to keep going. And it kept going for a while. And then all of a sudden, because these are big candles that is moving up, right? Then all of a sudden, this sucker just stops, start going sideways. And then it turns around on them. And There you go. You lost your money. And it turns around on you so quick until you don't even have time to get out of your position, probably at a profit. But again, we wouldn't make what they would have made if this thing would have kept going. But guess what? It didn't, and they lost, and we won. So, and then here the thing is, so sometimes when this thing is teetering the line like this, you don't know which side to play. I happened to pick the call, then I went and got I have to pick the puts, then I went and got the calls, okay? When I got the calls, what I looked at was the day's high, which was right here around 51.39. Let's just call it 51.40. So I really wanted to be 20 points above that, which would have been the 51.60s. Well, because I have a hard head, I got the 51.55s. And look here, it got up as high as 51.49, which was pretty close. And I got out of that trade as a loss, okay? Okay, but the good thing is, because I knew I was breaking the rules, I didn't do as many of them. So I only did a few of them on the upside. And then when I got out of the loss, I got back in and did, hold on a minute, let me shrink this so you can see it. And did the 60s, which is the number that I should have got in the first place, and I would have never been afraid. But I want you to see how if you obey these rules, guys, and I ended up having a win for the day because I done that, okay? But I want you to see how if you obey these rules, you can be a winner by just using what I call the crystal ball, which is having a little foresight. And to help you with that foresight, what I do is go and draw trend lines, okay? So I drew a trend line before I got in my trade over here, just before I got in, which was probably around 12 o'clock, and I saw what the low was for the day. The low was down here, so I drew a trend line. That's this red line. And then I looked at what the high was for the day. At the time, it wasn't that. At the time, it was this right here. So I drew a line from here to this point here, and then it goes all the way across. Well, when it does that, I was saying that the stock should not pass this trend line. And if it does, it should barely pass and then come back down. Whereas you can see for the day, it never passed that trend line. Okay, so technically, I should have stayed in it when I had the 55s, but I didn't. And I got out, and then I got in at the 60s and then end up winning for that day. But the real answer is I shouldn't have never got on top of it, but that's okay. I've been trading a long time, so I wanted to do that. But if you follow my rules like I tell you to, you never would have got on top, okay? Anyway, especially when you're first starting out. Okay, so that's one way that it protects you. Okay, that's when you're trading throughout the day. And then the other thing I wanted to tell you is because I like to tell people we like to use the market against itself, okay? And we use that as all part of our crystal ball. And we use the trend lines and we use the volatility and all of that. Well, this week, guys, we have, and I would suggest you not trade these days. On Wednesday and Thursday, we have the Fed chairman speaking to the House, the Congress, the House of Congress. And then on Thursday, that was on Wednesday. And then on Thursday, he's speaking to the Senate, okay? The market's going to be doing some movement for them days. But here's what I wanted to show you right here. And this is the part where I tell you, you can use the market against itself, okay? Let me pull it up here just a minute. Because the market knows these things before we know these things, okay? And you have to learn to use what the market knows, like I say, against itself, okay? And when you learn to do that, it's going to make you a better trader. Okay, so let me pull it up just a minute here. I can't find it. There it is. Okay, now, for instance, the way I set up, you hear me talking about my free money trade, the free money trade. The reason why I call it a free money trade, guys, because number one, it won't feel every day. It only feels about, anywhere between about 5 to 9 or 10 times a month. I like to say about 6 times a month. On each one of these trades, you're only making about 7 or 8%. So you can average about 5% a month on these trades. If you do that, it can give you an income. Okay, 5%. Let's say you got 20 grand. Okay, and you want to help supplement your income. 5% on 20 grand is about $1,000 a month. Okay, and we're not even talking about compounding. We're talking about making $1,000 a month. Anyway, but let me just show you how this market helps protect itself, protects you, and how you can use the market against itself to protect you, because they give you a little hint when they think something's going to happen big, and they give you a little hint when they don't think nothing is going to happen big. For instance, today is the 5th. Okay, if we look at the strike price of the 5th and we look at the straddles, let me go there. Hang on a minute. I thought I was there, and I'm not. Just a second. Am I there? Okay, hang on. Let me get there. I think I was there. Anyway, yeah, I'm here. So if you look at the straddle, which is the calls and the puts that are at the money. And if you don't know what I'm talking about, guys, maybe you need to get on and get in with slow life trading. But anyway, so the market closed at 51.30.95. So the at the money would be the 51.30s, right? If you look at what it is for today, it's going for $20.30. Okay. If you look at it for tomorrow, when the Fed chair is speaking, they move it up to $34.60. Well, guess what? Now you got what he done said that day, plus what he could say on Thursday when he talked to the Senate. And they move it up on Thursday to $42.20. Okay. Now, you got to take into consideration, today is 1 day, the next day is 2 days, and the next day is 3 days. Okay. So that's going to raise it up some. But even if you take out those days, and let me just show you, and then you can't really count it, because Thursday night the president speaks, and then Friday is jobs report day. So it's going to go up even more. So you can't really count it that much. But if you look at it day by day, you will see that those numbers are going to go up because they're expecting something to happen. When they expect something to happen, they have to raise these numbers up in order to protect themselves. So what we do is use that number, okay, to help us win. And it's what I call the crystal ball, because you can look into it with all these numbers and it'll show you that something is going on. Now, you don't know which way the market is going to move. It won't let you know that, but it does let you know that they're either anticipating a big move or not anticipating a big move. Okay. And we use that to make us our money. And if you go back, okay, so I done told you that. So now let's go back to that chart again one more time, and then I'm gonna close this thing out, because I just want to give you a little quick, a little quick something for today. If you look at this, guys, like I said earlier, this is a typical shakeout, because if you see this market going up, you have a tendency now to want to get in on the puts, and you may get in on the puts maybe, I don't know, let's say you get right below the 200 moving average. The 200 moving average at that time when I got in was about, it was at the, hang on, I'm looking at this little red line in the middle. It was at 51.35. So if you get a little bit below that, you may want to get down to, say, 51.30s, okay? Which would have been right about just below this little bit right here, okay? I put it like this. It was just below where it closed at. Well, it's because you saw this market going up. Now you think it's going to keep going up, okay? Don't be fooled by that. This is how the market is playing chess while you're playing checkers, okay? Don't play checkers when the market is playing chess. Be prepared for them to make their next move. And when you prepare for them to make their next move, what that means is we got way down below the low, just in case they want to try to bounce back and get us, okay? And I promise you that this pullback right here got a lot of people. But guess what? If you're trading a slow life trading way, the way that I'm teaching you to trade, it wouldn't have got you, because you would have drew your trend line, and then you would have saw that you needed to be below that trend line. Okay. Now I will give you the fact that 30 was right at the trend line, but if you would have had the 25s or the 20s, okay, for instance, you may not have been able to get as 20 points below it, but if you would have got 10 points below it, for instance, and you would have had the 15s, which would have been down here, you wouldn't have been as afraid. So that's all I'm saying. It just allows us to be able to win on a consistent basis every day. Okay. And when you draw these trend lines and when you obey what I'm telling you, you're going to see that you can win with this thing. And even though you're only making 0.7%, 0.8% a day, which seems like nothing, okay? When you figure that up, just say 0.8 point times 6 days, it's going to give you about 5%, maybe a little bit more per month. Guys, banks are paying 5% a year. If you can learn to make 5% a month, 60% a year, and you're not even trading every day. And this is just only one part of the Golden Goose strategy. The Golden Goose strategy has two parts, okay? It has a free money part, and then you put on your regular trade for the day part. Once you combine both of them, it's going to give you about 25 trades a month. 25 trades a month, making about 0.7, 0.8% is going to get you, even with a loss, over 10% a month, okay? And the thing is, if you obey this like I'm telling you, you probably won't even be having losses because I'm teaching you how to never lose. Never lose. It don't mean we won't lose, but I'm teaching you how to do that. We got things in place so when we do have a lose, we don't take a bath, okay? We got a calculated amount that we're going to lose. But, because, you can lose. But I'm teaching you a strategy that is so good until we're designing it to where you never lose. And part of the reason for this, guys, is because we have learned how to use the market against itself. Okay? When you learn how to do that, you're playing chess with the market. You're not playing checkers while the market is playing chess. Anyway, guys, just want to bring you that. And ending this little video here, I just want to also tell you that be aware of the news, guys. I know a lot of people don't like looking at the news or reading the news or whatever, but some things you just need to know. For instance, even with the free money trade, even though it prepares you for these big moves and all of that, and it does, you still want to know what the move is. Like, for instance, tomorrow with the Fed speaking to Congress and the Fed speaking to the Senate, the free money trade is probably going to win with no problem, okay? But the key word there is probably. We don't want, when we going into a trade, we don't want to feel like we got to probably win. We're going to probably win. We want to have a feeling in our mind that we know we're going to win, okay? So with that, I just say don't trade on them days. Now, what that does is it cuts your trading this month down from 20 days to 18 days. And that's okay, okay? Because we still got the free money trade, and the free money trade may feel more than 6 times, and that'll make up the difference. So we still should get our 25 trades for this month. So anyway, guys, that's all I have for this morning. Wishing you a good trading day and a good trading week. If you like this video, hit the thumbs up button. And if you haven't subscribed to us, please subscribe to us. I'm trying to grow this channel. I'm almost at 1,000 subscribers. And I'm really trying to hit that mark. I appreciate all your help. Okay. And of course, if you want to be a student with Slow Life Trading, check the stuff down before. I put in there links where you can get on our email list or you can join Slow Life Trading. Anyway, until the next video, guys, peace out and keep it slow.